The capital market is one of the main pillars of a country financial system, eh, as it provides a means for company to obtain long-term foundation and for investors to invest their capital in order to gain return. In general, the capital market can be defined as a marketplace where parties with access funds may just the need of funds through the buying and selling of security. Instrument trade in the capital market include stock, bonds, and mutual fund and various financial derivatives. One of the key elements of the capital market is the stock exchange, which serves as the platform of system that connects buyers and sellers of security. In Indonesia, the Jakarta Stock Exchange or BAG and the Surabaya Stock Exchange or BAS merged in 2007 to from the Indonesian Stock Exchange or IDX. The IDX played a crucial role in ensuring that securities trading rule is in the orderly, fairly, and efficient manner. The operation of the IDX is regulation and supervised by the Financial Services Authority or OJK, which oversees the entire financial sector, including the capital market. The capital market consists of the primary market and the secondary market. The primary market is where security and intelligence sold by issuer to investor before being future traded in the secondary market. The process is now as an Initial Public Offer or EFO. After EFO, the debt security can be traded in the secondary market which serves as platform for investors to buy or sell previously in security. Trading in the secondary market occurs through two main methods. The allocation market, the security price are determined through building, and the negotiation market. The transactions are arranged directly between buyers and sellers. The primary instrument in the capital market is stock, which represents ownership in a company. Stock are categories into two types, common stock and preferred stock. Common stockholders have voting right as stakeholders, meeting and are entitled to dividend if the company has a profit. On the other hand, preferred stakeholders have priority and safety different and asset distribution in the event a company liquidation compared to common stockholder. Besides stock, bonds are another important instrument in the capital market. A bond is debt security issued by a company or government promised to pay interest per year and repay the principal amount at a specific maturity date. The most commonly traded bonds include corporate bonds are issued by private or state-owned enterprise. Government bonds are issued by the capital governance, and municipal bonds are issued by local government or financial public instrument project. Bonds also have characteristics such as nominal value, coupon rates, and maturity dates, which investors must understand before investing. Apart from stock and bonds, there are other financial instruments such as derivative security. Derivative a financial asset whose value is derived from other underlying assets, such as stock or bonds. Some examples of the derivative instruments include future contract an uptime contract. A future contract is an agreement made to date the obligates and transaction at a future date. Whenever an option contract gives the holder the right but not the obligation to buy or sell an asset at a predetermined price within a specific period.